Hi traders, in this video we're going to be taking a look at the 3-line strike candlestick pattern. This can be a bullish or bearish candlestick pattern. What it signifies is a reversal, then a breakout. I like to pick this in the direction of the trend rather than counter trend trading. However, it can be used in both scenarios. It can catch moves such as this one for almost 100 pips. This is a 1 hour dollar Swiss franc chart. You can look for the 3-line strike candlestick pattern on any trading instrument, whether that's Forex, cryptos, stocks, commodities, indices, etc. And you can also look for it on any chart time frame. I personally prefer the 1 hour charts and above, 4 hour, daily, weekly, monthly, simply because they contain more price data, which tends to give more reliable signals in my experience. Okay, that being said, what is the 3-line candlestick pattern? So basically this is a formation that consists of well, the first thing you've got to look for is the, let me just zoom out here, find it there. So the first thing we're looking for on a chart is either three bullish or 3 bearish candlesticks. Okay, so we have here 1, 2, 3 bullish candlesticks, and then following on from that we want one big candlestick, the strike candle, let's say, which goes below the low of the initial 3 candlesticks. Okay, so here you can see 1, 2, 3 bullish candles and a bearish candle that goes below the low of these 3 to here. So that's our bullish 3-line strike. Okay, you also have one here as well, so you have at least 3 candles up and then one candle that goes below the preceding 3 candles there. Good thing about this particular setup is we already have a trend in an upwards direction. We can see the market is making higher lows that we know, so we know we're in an uptrend. We have a nice pullback to the trend line. So in terms of entry, what you do is you look to enter on a breakout of the 3-line strike pattern. So again, there it is, 1, 2, 3 strike. You look to enter on a breakout. Okay, you can wait for a candle to close above the breakout for confirmation. This also forms a nice wedge pattern here on the uptrend. We do have videos on wedge patterns that you can check out. Yeah, and then there's also a 3 white soldiers candlestick pattern here just for additional confirmation. That's at least 3 bullish candles. And yeah, you can see if you took that entry based on the bullish 3-line strike, I mean, that move was good for almost 200 pips. Okay, so it does show the power of this candlestick pattern. The thing is, you just need to know when to take it. I wouldn't take them all as is, because you'll find that not all of the time it will be an ideal scenario. Also, some traders may argue that here you could have got in earlier rather than waiting for the completion of that candlestick pattern. You did have this level of resistance here that we could have traded off based on the breakout here. We also had some spinning tops, suggesting the indecision in the market followed by a nice bullish candle, which would have been a continuation of the move to the upside. You can confirm with technical indicators if you want trend direction. So for example, if we put the ADX on the chart, on the ADX indicator, when the green line is above the red line, it suggests an uptrend. When the red line is above the green line, it suggests a downtrend. This line here, the main line, is to measure momentum. I've marked the 20 level on the ADX because I say that anything above 20 suggests there is momentum for the trend, whereas anything below, we may be in a range in market. As you can see in this range here, the ADX is actually below 20, the main line, suggesting we're in a range. And then as price breaks out here, momentum increases. We do have the bullish divergence as well there, suggesting good momentum in this trend, and that coincided nicely with this breakout trade here. If we could just go back to the 3-line strike candlestick pattern, remember that we were looking to trade a breakout of the resistance of the pattern. which was around here. If you did that, you could see the ADX is showing good momentum to the upside. Green is above the red, so extra confirmation for our trade. There will be instances where the ADX may keep you out of trouble, or another indicator and be against the signal. So if we move along, we're probably going to ignore this one just simply because we've had this big candle here. That's a NFP candle. You wouldn't really want to trade around that, just too volatile. So do we have any more bullish ones on this particular trend? Okay, so now we're going to look at an example of a bearish three-line strike candlestick pattern. Again, the principle is the same. We're looking for the three candles, at least three candles. Here we have 1, 2, 3 bearish candles, and then we have the strike here, which is a big up candle that covers the previous 3. Okay, we're in a downtrend, which is great because we can trade this reversal, this pullback if you like, on the trend. So it's clearly the market is downwards. We see the bearish three-line strike. What do? We mark the low, and that could be a potential entry point on the breakout. You can see that this level actually held up quite well as support. We'll see a lot of traders were watching this particular level, and then once price did break through, it became a resistance level, which emphasizes the importance of this particular line. So that could have been a good entry on the breakout into this particular trend. As you can see, price then fell over 300 pips, which would have been a really good entry. In terms of the stop loss, you could place it above the high of the three-line strike candlestick pattern, or you could have just used in this instance the other resistance level, which is here. And then as price did broke out and continue downwards, you could have locked in your stop loss, break even, and then just trail it on the way down. Okay, just to maximize profits if price does turn around, perhaps close part of the position on the way down. Okay, there is a bullish three-line strike candlestick pattern, but we're going to ignore that because we're in a downtrend and I prefer to trade them with the trends. It's worth mentioning that this is just my interpretation of the three-line strike candlestick pattern. Other traders may interpret it differently. Some may just look at bodies, candle bodies. Some may look at the wicks as well. Okay, and the ADX, again, for confirmation. Not that we needed it. We can clearly see there's a strong trend downwards, but if we entered on the breakout here, you can see the ADX red line's above the green line, and the main line is above 20, suggesting that there's good momentum in the market. So that would have been a good trade based on the bearish three-line strike candlestick pattern. Personally, I do think some just waiting around for this as entry is in my opinion not a good idea. I would use it for confirmation if need be, but I wouldn't only take a trade if I saw one of these, because there'll be instances where, you know, there'll be good trade setups and you won't necessarily have this candlestick pattern or any candlestick pattern for that matter. You do have 3 black crows here. There's another candlestick pattern. Prices fall in. We've got a nice level of support, a pull back to the resistance there. It's actually a nice wedge pattern, so that would have been an entry. As you can see, there's no three-line strike candlestick pattern, but nonetheless it's still a good trade entry. So it's good to be aware of different candlestick patterns, but for me most important is price action in terms of support and resistance, and trend lines and candlestick formations can just be good for that extra bit of confirmation. And going back to this one, this three-line strike, this bearish one, I mean, I probably would have drew that as support anyway, regardless of the there being a candlestick pattern. So if anything, it can just be used as a guide to help you know where to draw your support and resistance levels. And yeah, just be aware that you don't have to, it's not the be all and end all. It's just something, just a nice pattern to be aware of. As always, make sure you've got good money management, locking in trades once you can. I like to have favorable risk to reward ratio, but nothing too rigid. Just really go with what the market tells me. and use trailing stops. You can use indicators to filter the trades, but at the end of the day, sometimes they just tell you what you can see by zooming out and looking at your chart. Anyway, clear downtrend. I mean, you can see that as a good breakout there. Lots of traders watching, trying to jump in on this trend. I mean, there you could just use that support level and look to see what happens around here once price started to fall, price moving away from the resistance. But yeah, I could go on. There's 1,000 different ways you can trade. I've got lots of videos for ideas, and yeah, hopefully you found something useful in this video. Appreciate you watching. Please like and subscribe for more.